Um, well, it's not an easy question to say, because impact investing, you have several people looking at different impacts. Sometimes it's being confused being philanthropy, which is not supposed to be. Sometimes it's being confused with an asset management style, sometimes a class. So at the end, I mean, from our perspective, is what we do is impact investing means that you use capital as a force for good. So you invest in what we do, and you have different ways you can do it in the different asset classes you can apply impact investing. Our sweet spot is really specifically backing entrepreneurs of companies servicing the low-income population in emerging markets. So that's what we do on our common base. It can be a private equity, also private debt, but really at the end is really focusing on creating SMEs. And as we, of course, do that for financial returns, but also we apply here a clear focus on impact on the ground. We measure this one, we report it and announce it. But again, that's in our case at Bamboo Capital, what we do on the impact investing side. But again, there's a larger spread, the different components to it. Probably we are more on the, more on the riskier side when it comes to rural populations, basic services, financial inclusion, so access to money, access to healthcare, access to energy is a big component, also access to education. And then when it comes to the productivity of the population locally, it is in agriculture. Again, there is a standard, let's say, definition of impact investing, but the way it's lived, the way it's focused, and sometimes also maybe misused, is not an easy task. But the market is maturing, and so a lot of efforts have been going on here to standardize things and make sure that there are certain principles applied to make sure that impact investing is really about impact, not just sustainability, not just ESG. But probably the best person to talk about here on the panel is Robert, having been there for many, many years.